Hey, welcome. Debunking technical analysis myths. Meaning, if you want to do technical analysis, you ready for it? You do not need to be a quant to be successful in trading. Now, by the way, for this video, I'm not talking about day trading. I'm not talking about trading on the 1 minute, the 3 minute, the 15 minute. The type of trading that I am talking about, and for some of you, you may know this and some of you may not, there are so many ways to trade. There is not one way or the way. So depending on your learning curve and your time, etc., there is a variety of ways. And the one that I want to share with you is, we can just call it like swing trading. This means that you could potentially be in a trade for weeks, potentially even months, or you could be out of a trade for weeks and/or potentially months. And I'm here to share with you some ways in order for you to do that, regardless of your education and regardless of your learning curve. So let's get started. So before we dig in, just real quick about me. I am a former IBM team member for North America. I worked there for about 5 years. And my primary role there was in the industrial space. While leading that sector, I had a variety of offerings or a variety of products, but most importantly was blockchain. So back in early 2015, that's when I first heard about blockchain, which really intrigued me. And it was at that time that I was talking to myself and I said, hey, John, this is something that you're probably going to dig in and really understand, because it's going to become very relevant in about 5 to 10 years. Fast forward to this day, and it has become very relevant. I was also contemplating about whether or not I want to learn how to trade, because I missed the .com era, and I vowed to myself I did not want to miss that. So I started learning how to trade back in 2015. And as a result of that, I'm also a former co-founder of a Bitcoin and Ethereum hedge fund. And during my time there, I was a key part of the overall setup for the buy and sell indicator. So I was part of the architect team that designed, again, the buy and sell indicator. So I feel as though I've got a bit of a background to share some of my thoughts with each of you. So let's dig in a little bit deeper. So this is mainstream media's portrayal. So number one is the fear-mongering. Mainstream media often tries to create a sense of panic around sudden market movements, which lead to rash decisions and potential losses. And then number two is these overcomplicated strategies. And I don't know if you've noticed, but they sure make it sound like it's extremely complicated. The media outlets often give us the impression that only complex trading strategies can succeed in the stock market, or even worse yet, they're trying to scare the bejesus out of us for cryptocurrencies such as like Bitcoin, Ethereum, and the altcoins. And then number three, there's all these false promises, meaning there's advertisements promising these easy profits with like little effort or experience that can be enticing, but they're usually not based around sound trading principles. Now, I won't go into too much more detail around the emphasis that mainstream media has, or even social media, on how treacherous or how scary it is to actually become a trader. So I'm going to dig in on demystifying the technical analysis. So there's 4 areas that I wanted to focus on is the strategy. And for what I'm going to share with you at the end of the video, there is a strategy. There really is, but it's very simple. And I can't wait to show it to you. Patience. This could not be more true. This is one thing that I have definitely learned. And let me give you a quick example. If you think of people that go out in Mother Nature, in the wildlife, and they are photographers. And I don't know if you've seen them, but they get all dressed up and they got their camo on so they can't be seen. But if you notice, in order for them to get these really cool pictures, they have to be out there for hours and days. And I would imagine there's some serious photographers that are out there for potentially weeks on end trying to find that ultimate picture. So just think of, when I say patience, think of that. Trading should actually be extremely boring. For example, I'm going to share with you that when you actually do decide to buy something, when you buy it, you could be in that trade for weeks and months. And then when it's time to sell, you could be on the sidelines or in cash for weeks or months. So it's definitely not chaotic. If anything, it's extremely boring. And then I would say, from a tech stack perspective, this is probably the most difficult thing about trading, is understanding the tech stack. And I'm going to share with you, there's really one tool that you need. And I'm going to share that with you here in a minute. But that tech stack, not trading, but the tech stack, has actually got a learning curve where you need to spend a little bit of time on trying to understand how to navigate through this particular tool. And then from an education standpoint, I'll share with you some of the basic indicators that can be very potent to make some really nice gains. But you want to learn, you want to be a constant learner and be very curious. And there's some really great videos out there on social media, and I will share a few ideas with you here in the coming slides. Importance of the trading tools. So here's what I was referring to, the tech stack. Here is the one key tool, and there's several out there on the marketplace, but the one in particular that I like is TradingView. There's different versions of TradingView. There's a free version. With the indicators that I'm going to share with you, you can definitely use the free version. And the more advanced that you get, there are paid versions. I think the next level is like $15 a month, and it goes up. And again, there's other competitors to TradingView, but I really like this particular tool because the indicators I'm going to share with you, they are free. And not only that, they have a mobile app, which is amazing. And they have alerts, which I'm going to touch on in a second in terms of what are alerts. And then the second thing is a rules-based approach. There's going to be certain rules that will apply, and I'll share those with you, but they're very easy, but you need to stick to those. And the reason why I have this rocket right here is, just think about if you are part of SpaceX and you want to launch that rocket. Those scientists, those engineers, they all have a checklist. And if each one of those boxes are not checked, that rocket is not going to lift off. So you just want to make sure that you identify your checklist. And I'm going to share that with you because it's really simple. But you just want to make sure that you follow your rules-based approach and you are patient. And then the last thing for this is what's really cool. You don't need to sit in front of your charts. TradingView, once again, has these alerts that you can create within TradingView. Means you can set it for, hey, it's time to pay attention. So again, alerts, they can come right to your cell phone. All right, so here are the indicators. So these are the indicators that come from, say, TradingView as an example. And by the way, there are hundreds, if not thousands, of indicators out there that people use. So remember, there's a variety of ways to trade. It really depends on your style and your preference. I'm going to go live in TradingView so you can actually see firsthand where they are and how they work. And you can see I'll share with you some of the gains that you can make just by using these few indicators. The SMA 50, it's a simple moving average. And I'm not even going to go into detail of what this is. There are so many videos out there on YouTube that explain what this is. But just watch. You'll see what I mean. It's so simple. But there's two primary use cases for the SMA 50. And I think it would probably be better if I share with you, once we get into TradingView, what those two primary use cases are so you can visually see it with your own eyes. And then we have the EMA 15. This is key. These two work very well together. And I'll explain with you why. This is also a nice to have. It's not a must have. This also comes with TradingView as well, and these are free. And if you remember, I said TradingView has a free version that allows you to have up to 3 indicators. So here's 1, 2, and 3. So you can be just fine with their free version. And then when I go live, I will share with you what this indicator is as well. And again, There's probably literally 100, if not 200 videos on YouTube about the MACD, the moving average convergence and divergence. Basically, think of the MACD as if you're on a sailboat. If there's wind coming in to the sails, so you have momentum at your back, which means you want to trade with the trend, or if there is no wind, that means there's no momentum. There's no trend to hop into. So this is a cool little indicator, but it's very effective and very potent. Time frames to watch. So at the beginning of the video, I was alluding to that what I want to talk about is this is not how to be a day trader. This is not how to trade on the 1 minute, the 5 seconds. This is not to be an intraday trader. The key thing is right here, and there's a variety of time frames with trading. Again, you could do the 1 minute, you could do the 3 minute, you could do the half hour, the 4 hour, the daily, the 1 day, the monthly, the yearly. So my suggestion is, if you're new and you're interested in this, and I'll share with you when I go live in TradingView, how to identify if you're on a 3-day time frame or a weekly time frame or a monthly time frame. And I'll share with you that is. But when I go live in TradingView, we're going to really focus probably on the 3-day. All right, so this is the last slide before I hop into TradingView, but I truly mean this right here. Anyone can be successful, and it's almost at any age. So I actually truly believe, I would say from middle school on up, that anybody can learn this, and you'll see what I mean here in a few minutes. Now, when I say education, what I mean by education is just learning. Again, the hardest part about this is learning TradingView, the tech stack. And then from an education standpoint, get to know the indicators. I think after a few hours, 15 minutes here, 10 minutes there, it'll make a lot of sense. And then practice. And what I mean by practice is I've got a cool little hack right here. But once you learn TradingView and you get these indicators loaded into your chart, which I'm going to share with you in a minute, then what I would highly recommend, and this changed my life. Remember how I was talking about the time frames on the previous slide? You're going to take your time frame down to the 3-minute time frame. Not the 3-day, not the weekly, the 3-minute time frame. And then what you do is you have a monitor, like at the tablet or even on your phone or your computer, and you just leave it on at your home as an example, and you just leave it on all day. And what you do is when you're walking by, all you got to do is just glance at it. And here's why. That's because patterns repeat. It doesn't matter the time frame. So when we go live in TradingView, I'll share with you what these patterns, what they look like. And again, the patterns are the same, whether it's the 3-second, the 1 minute, the 3 minute, the daily, the 4 hour, the 3-day, etc., etc. But the real reason for the 3 minutes is if you do this for 2 weeks and you look at this daily, you're going to see so many patterns, and you're going to figure out, and I'm going to share with you what the pattern is, the winning pattern. And that's all you want to look for on the beginning of the patterns and as the patterns start to end. Okay. So again, after 2 weeks, you'll see the same patterns over and over, repeat. Now, if you were to do this on the daily, it would literally take you years to see these patterns develop and turn over. So it would just take forever. And that's why this literally changed my life, this hack. And I did this by accident. All right. Welcome to TradingView. And if this is your first time, this may look completely foreign to you. And that is totally normal and totally to be expected. And do me a favor, first of all, do not be intimidated. Do not be intimidated. There will be a learning curve for some, but once you get past this learning curve, you're on the downhill slide. And there are so many great tutorials out there from TradingView. So on average, I think they're like 6, 7 minutes, 8 minutes, 10 minutes. All right, so let me just share with you. So by the way, this is Bitcoin that we're looking at. And you remember how I was sharing with you on the time frame? See where it says 3D? That stands for 3 days. So if I click on this, you can see these different time frames. So again, here's the 1 minute I was talking about, all the minutes, the hours, the days, and this is also, you can modify this. But for this example, let's just stay in the 3 days. Now, this is where it gets exciting. Let's just jump in. So here's the very first indicator, and this is that 50 SMA, the 50 simple moving average. So just take a look at this. And here are the two use cases. Use case number one is we want to identify the trend. Okay, so either the trend is going up or it's going down. And what's really cool is this particular indicator, it's called the CCSMA 50. And what it does is it automatically changes colors. So you can see there's green and then there's red as an example. So when I say trend, you want to make sure that the SMA 50 is green, and preferably you want to make sure it's in a nice uptrend. Okay. So see this little section right here? It's actually going down a little bit, or up here, it's green, but it's going down. The good news is it's green, but we want to be patient. We want to see this pointing at a nice angle. It's not a non-starter if it's going sideways or down. When you see that, kind of time to pay attention. Now, use case number two. So simple. So hear me out. Price action. These candles right here, this is price. And in this case, remember, we're on the 3 days. Each one of these candles, bars, represent 3 days. And in my example, the white means it's going up, and then the orange means it's going down, but don't worry about that. But here's the use case. When price action is above the 50 SMA, that's when you want to look at buying. When price action is below, you are out. So for example, let me give you a real life scenario. When you see that we have the SMA 50, it's green, trending up, and then right here you got price action above, that's basically time when you start nibbling in. You start going in. And then, this is so simple, so easy. When you want to sell, this is it. When price action falls below the 50, no matter what, okay, no matter what, you sell everything. So like right here, you sell, and see right here, it fell below, but it didn't turn red, and price action still maintained its momentum to the upside. So again, right here's another example. Price action fell below the 50 SMA. You can see this whole section right here. So you're out. Okay. So this is what's cool. Watch this. So let's just take a measured move. So see right down here, let's say we bought in. Can you imagine? This is up 479% over 375 days. Easy. And then right here, now let's measure this right here. So if you were to sell everything right here, whoops. If you were to sell everything right there and then hop back in right here, you would have missed a 62% correction over 409 days. You seeing the power of this? Let me just do another one for you. So here's one right here. So let's say we sold everything right here and we hopped back in right here. Not a very big correction, but you wouldn't have lost any money and you would have avoided almost a 13% correction for Bitcoin over 122 days. Here's another one right here. This is a little one. We would have missed this, but you would have missed about a 7% move over 50 some days. So if you see, let's do one more. If you see this guy right here, this is a nice one, but you would have made 135% in 174 days. So it's really that simple. Don't overcomplicate it. So one more time. You want to find the trend. That's use case number one. Is the SMA 50 green or is it red? And then if it's green, you want to make sure it's trending up, right? And then if it's red, as an example, the trend is not your friend. It's going down. So number one is the trend. Number two use case is price. Where is price, right? And remember, where's price? Is it below the SMA 50? And if that's the case, you are in cash. You sold everything. And then if price action is above this and it's green, you start to buy in. That simple. Okay. And then the last thing is when you sell. It's right here. When price action, no matter what, when price falls below the SMA 50, just like right here, you sell. And remember how I said trading was boring? So in this particular case, you would have made right here, you would have made one buy, one trade, and the next time you would have made a trade would have been 384 days later. Okay. That's what I mean by trading should be boring. And if you were to sell right here and hop back in right here, you would have been out for 81 days and not done anything. Let's see, let's get another one. Let's just make, here's another. If we were to sell right here and buy back in down here, you wouldn't have done anything for well over a year. So for 415 days, not one trade. So in this whole setup, and this dates back to 2019, as an example, every time green, there's two trades. There's a buy and a sell. So there's two trades here. So 4, and we have 6 total, 8, and then 10 trades in a couple years. So let me repeat. In this example, on the 3-day time frame with this indicator, you would have had, I can't remember what I said, 6 or 8 trades in a couple years. That simple. Now, let's take a look at, let's layer in the 15 EMA. And I'm not going to go into detail of what this is. Again, there's a lot of YouTube videos on this, but this is what I want you to see. This is really cool. Let me just zoom in. All right. So if you want more validation when you are about to buy, to come into the market, the 15s are really primarily for entries, not exits, even though they do matter for exits, but it's primarily for buying in to take in a long position. But here's one I first want to draw your eyes to. So these orange lines are the 15s, okay? So a couple things is when you see the orange line, the 15s come up through, this is a bullish crossover. This is a classic moving average crossover. But when you see the orange line also come up through the 50 SMA, and when the SMA is green like, this is also nice confirmation that it's okay to buy in. So hopefully that makes sense. It's really that simple. And let's take a peek at, let me see if we've got another opportunity for an entry. Yeah, and we'll obviously do an exit here in a second when we sell. Okay, so right here, we've got the 15 EMA, right? And then we see it come up through, we've got a crossover, and notice we've got a green 50 SMA. Now this is not a very strong trend because you can see the green, the 50 SMA is pointing down, but really that's okay. But when you see this crossover, again, of the 15s coming up through, that is extra validation that it's safe to buy in. Okay. Now, when you see the orange 15s cross down like this, when it falls through, that's also confirmation that, you need to get out. But really, the indicator that you want to pay attention to sell, this is really easy. You don't need to make this complicated at all. Is you don't necessarily need to look is the 15s crossing down through the 50 SMA. Really all you care about is when price falls below the 50 SMA, you are out, O-U-T, out. So just wanted to share that with you, and you can see here's another great use case where we've got the 15s coming up through the 50 SMA. That's validation that it's safe to come in. Now right here, this is interesting. At time of recording, we've got price literally resting on the 50 SMA. So right now, I'm in a trade, and I'm going to stay in a trade until it does something like this, where it falls through, or something like this. But as of right now, I'm actually going to stay in my trade because I also like the trend. I have no idea which direction this is going to go, but I like the direction of this angle. And it's also green, and price, if you can see that, it's resting on there nicely. So that is really about it. And down here on the bearish scenarios, you can see price action it comes up above the 15s, the orange lines a couple times. But all you got to remember is, see this orange line? You're out. And it really doesn't matter what's going on with price in the 15 EMA at all. Because what you're waiting for, this green needs to, or excuse me, this red needs to turn green. And it's really, truly that simple. All right, so let's just do this as a wrap up. So here's 2017. And let's say hypothetically that this was your trading strategy, okay? And you actually bought Bitcoin back here. I'm just trying to squeeze it in here so we can see it so it doesn't get too confusing on the eyes. And by the way, I'm going to get rid of, just to clean up the chart, I'm going to get rid of those orange lines, the 15s, just so it's a little easier, okay? But I want to share with you something. So again, let's say that all you had, and you started buying in on Bitcoin, and you just had this one indicator, all right? And you bought back in, so right where I'm at, where my crosshairs are, is 2016. It's September 12th, and this is where you bought in, all right? So there's your position. You made two trades. You bought right here, and you sold right here. So you made 1,571% over 509 days. No problemo. I'm going to skip these cells, but I'm trying to make a point. And you bought in right here, again, over 183 days, you're up 126%. And then I'll skip this right there, but we'll say this right here. And then over 375 days, you're up 467%. And then let's say we bought in right here, over 69 days, you're up 21%. And then right here, bought in, and you're still in. And over 147 days, you're up almost 36%. So you can see, since what, 2016, you had what? 1, 2, 3, 4, 5 trades. And I can't do math, but this is almost 1,600%, 130%. So let's do some quick math. So this is about, let's see, 1,600, 1,700, call it 2,000, still at 2,000. So let's call it 2,100% that you would be up on your money since 2016. Let me repeat, 2,100%. And I don't know about you. I don't know if you bought Bitcoin back in 2016, but I'm wondering how many of you would be up 21%. Or if you bought in 2017, if you bought in at 2017 with no trading strategy, then this was the peak right here, and you can see right here, you would actually only be up, and I'm going to measure this, if this makes sense, to right now, you would only be up 36% since 2017 peak. That's because we've been coming down. So anyways, hopefully that was helpful. And do me a favor, don't try to overcomplicate it. It really, truly is that simple. All right, so let's layer in. I want to add one more indicator, and this one's a little bit more of a learning curve, but not much. A little bit more, again, but not much. And you don't really need this one either, but if you could, this is called a MACD. It's a moving average convergence divergence. And what I want you to focus on is these histograms. So where my cursor is, this is like a zero line, okay? So all you really care about is these two moving averages lines. There's a blue and a red. You want to make sure that these moving averages are above this zero line. And this is the zero line, right? You can just see it if you get into TradingView. All you really care about is you want the moving averages above this zero line, because if you notice, if you look straight up, right, those moving averages are above the zero line, which means price action is also above the 50 SMA, and it's green. And you can literally just go back in time. So like right here, probably tough to see. So right here, we got the moving averages coming up through the zero line. If you notice where my crosshairs are, where my mouse is, right there, and you look straight down, right? Price action right here is, first of all, the 50 SMA is green. You got price action above, and we've got these moving averages above the zero line. So it's really cool. And the thing you just want to shy away from is, are you going to be buying in when these moving averages are below the zero line? So check this out. So if you can see right up here where my crosshairs are, we're selling right here. And if you look straight down, you can see that these moving averages down here on the MACD are just coming, like right now, they're at the 0 line. This is confirmation that you sell, you abort. Okay, and then right here, you had the moving averages come up to the 0 line, but got rejected. And guess what? The 50 SMA is red, price action's below it. So this is confirmation you are out. All right, I sure hope that was helpful. And believe it or not, as part of a hedge fund, believe it or not, I use this right here, the 50 SMA, every single day. This is probably the number one thing I look at first. All right, so in closing, I sure hope that was helpful. And do me a favor. Again, there is literally hundreds of ways to trade. And as I mentioned, as a former co-founder of a Bitcoin and Ethereum hedge fund, this one indicator, the SMA 50, this is the number one thing I look for, is what's going on with the trend and where is price action. Is price action above? Is it below? Is the SMA 50 trending up? Is it down? Is it green? Is it red? And literally, this is my go-to that I check on first. So, hey, thanks so much, and I sure hope that was helpful. And remember, don't let mainstream media or social media spook you. It's really that simple. This is a wonderful place for new people to get started, and it can be very potent and very extremely effective. All right, thanks so much.